Hey friends, Kris Krohn here with Limitless Wealth TV, and today we've got a question from Sahil about equity. Like, what's real equity? What's fake equity? What's equity?
Hi Chris, my name is Sahil, and so today I'm along with the question that one of the guy from Canada is saying that you cannot buy a house with the equity. So let's say my house worth for $200,000 and I got for $180,000. The seller is selling for $180,000. So $20,000 is my equity here. So before getting a mortgage, you're gonna apply the mortgage to the mortgage broker or the bank, right? So you cannot take a mortgage of, let's say you need 20% down payment, for example. So 40,000 is your down payment, so you need $160,000 because you're buying a house with the market value. So if banks knows that seller is giving you for $180,000, instead of that you're buying for $200,000, so you made a false statement with the bank. You made a false mortgage statement with the bank. So Chris, is that true? What do you think? Because I've seen people talking about this, so that's why I'm just really shocked, because I was already following your path. What did you say, that how the game plan was? But some people just distracted me because of these things. So please, Chris, help me here. Do the laws and principle, all those changes in different countries. So please try to explain that, Chris, because this is very important for me, because this is the only way. The equity is the only way to decrease the risk. So without equity, I cannot buy the property. So Chris, please talk about this. Do it is fraud or do it is good? So what kind of suggestions you give? What kind of do you think that it's different in all countries? So please suggest, Chris. This is a very important topic. Thank you.
Sahil, thank you so much for asking this question. In fact, it's a great question, and I can really see why there's confusion. So for everyone else here that's watching this, this is the scenario as far as I understand it. Let me share the numbers back as far as I understand them. We're talking about a house that has a value of $200,000, but there's a purchase price on it for $180,000. And right now, when it comes to getting the bank, the question is, I need a down payment. How much is my down payment? Because I have $20,000 of equity. Well, Sahil, here's the first thing that I want you to understand. The bank doesn't care that it's worth $200,000 and you're getting it for $180,000. The bank doesn't care if it appraises for $180,000 and the bank doesn't care if it appraises for $200,000. The bank is not in the business of giving a rip of what your equity position is on the house. The only thing they care about is making sure that they're lending on a home at or under its value and not over. Because why would a bank want to do a loan for $220,000 on a house worth $200,000? So regardless of where the appraisal comes in, they're only interested in the purchase price, in knowing that at least that's a fair market deal. Now, is there in fact $20,000 of equity here? Yes, there in fact may be. You may have run comps. It may actually be worth that $200,000. But remember, a home is only worth what someone is willing to buy it for. So even though you think it's worth $200,000, you're willing to pay how much? $180,000. Now, investors, people like you and I, we increase our net worth by $20,000 when we buy a smart house like this. But in the eyes of the bank, they're gonna say, hey, you're buying it for $180,000, the appraisal came in at $180,000, you need your 20% down payment, 20% of $180,000 is going to be a down payment of $36,000. You might have $4,000 in closing costs, and at the end of the day, you're going to be bringing in $40,000. Now, this $180,000 is going to get paid down by $36,000, which means that what you're actually going to owe on the property when you actually move to buy it is $144,000. Where did I get this? $180,000 minus your down payment is going to be $144,000. Now, you have a house that you owe $144,000 on, worth how much? $200,000. Now how much equity do you have? Well, now you have a total of the difference between $144,000 and $200,000. Now you have $56,000 of equity. Now $36,000 of that was your down payment that you put into it, but that's now what your equity looks like. Now at some point, if you're saying to yourself, hey, on paper, I'm worth this extra $20,000. How do I actually get that money in my hand? There's really only a couple of ways that you can do it. The first way is you could refinance the house. Maybe the bank will let you actually reappraise the property and actually allow you to take out up to 80% of the value. Well, 80% on up to $200,000 is going to be $160,000. There's about $14,000, $16,000 that you could take out of it. Or you could sell the house, and that would be another way of getting the equity. Or you could have a private investor come in and actually collateralize the property and give you some money, and that could be another way of actually getting a check and getting some of the money out of the property. Hey Sahil, thank you so much for asking that question. For the rest of you watching this video, guess what? You can also submit video questions, and then when you do, we're gonna take some of them and produce videos just for you to help create more clarity and more understanding on how real estate and finance works for you. Thank you so much for watching today, and hey, guess what? Hike over to my website where I can share with you more hands-on what it is to be personally trained by me and my staff to help you become a rock star investor.